and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza. And the early morning optimism seems to be fading for us. So we've lost about 30 points from the top of the day. So still up close to about 0.3%, but the mid-caps have actually dipped into the red. So the mid-cap index has lost about 100 points from its early morning peak. So once again, facing resistance from markets at higher levels. I think, Anuj was telling us early in the morning how around the 10,900, 10,950 level, the markets have gone there eight times and retraced from that. And today, of course, we didn't touch the 10,900 mark, but at higher levels, closer to the 10,900 mark, clearly, there is a lot of resistance. Asian markets continue to have those strong gains. So Hang Seng is up more than about 2% odd. The Asian market picture will come up for you on your screen. So they're holding on to all their gains.
Well, that's right, Reema. In fact, the markets have come off the high point of the day. A couple of stocks as well that have come off the top. Infosys, case in point, that stock had moved to around that 690 rupees odd. Now it is at around the 676 rupees odd. So that stock has come off the high point of the day. Keep in mind, comes out with a set of numbers as well as a buyback proposal is on the table. But besides that, some of these metal stocks are getting whacked. You have NMDC, JSW Steel, SAIL, all of them, they are seeing some selling pressure. And I think the problem is Tata Steel's numbers didn't look very, very good. In fact, there was a degrowth. And on the back of that, all these ferrous stocks, they are selling off. All of them have moved to the low point of the day. We'll talk about that and more. First up, running you through all the top stories. Mixed global cues keep the key indices range bound on the Wall Street. The Sensex and the Nifty, they're off the morning highs. Mid-caps underperformed significantly. The Nifty Bank trades in line.
Brent crude prices spiked to over $59 per barrel. The rupee depreciates to trade near 70.4 level against the greenback, while bond yields remain higher near the 7.47% level.
And PSU banks is subdued today after CNBC TV18 learns that the Reserve Bank of India has rejected any special forbearance for IL&FS group loans. IndusInd Bank trades lower ahead of its third quarter earnings.
Stocks and news today. Infosys among the top Nifty gainers on news that it will consider a buyback and special dividend on 11th of January along with Q3 numbers, while Yes Bank in the red as its board meets today to decide on a successor for Rana Kapoor.
Okay, all right, let's get straight then to our movers and shakers. And let's start off with the big boy, Infosys. That stock's mildly holding in the green, but a couple of big events expected in the next couple of days. Reema, tell us the news out there and what are brokerages making as well?
Well, for one, on 11th of January, that's a Friday, the board will be meeting. It'll be a post-market hours meeting where they will consider numbers. Along with that, they will consider a buyback as well as special dividend. Now, according to the company's capital allocation policy for 2019, they had said 70% of the free cash flow will be returned via dividends, which will be your normal routine dividends. Over and above that, they will return $2 billion to the shareholders, which could be via special dividend or buyback. Of the $2 billion, they have already returned $400 million via a special dividend of 10 rupees per share, which was paid out in the month of June. Now we are left with $1.6 billion, which is expected to now come out, which is expected to be announced by the company on the 11th of January. And this has been in the news and speculated for the last 2 weeks or so, because that one-year moratorium between the last buyback and the next buyback ended in December, which is why the company can only go ahead with a buyback right now. So, Antique has come out with some estimates. So they say that if the company does an entire buyback, they're assuming a 15% premium to the current market price, so 780 rupees. Then, according to their estimates, the company can buy back about 3.3% of the equity. If the entire amount is returned via dividend, that's about a 22 rupees per dividend. Buyback is more efficient than dividend, which means the company is likely to go in for a higher percentage of buyback. But apart from the buyback, numbers will also be important. Seasonally weak quarter, but this quarter numbers will look better than last year considering the strong deal wins the company's enjoyed. So I think the most important thing is whether they have the confidence to up their guidance. Currently, it's 6 to 8%. A lot of people on the street, like Kotak, etc., believe that the company can at least raise the lower end of the guidance. So 6 to 8 can become 7 to 8, though they will continue to hold on to its margin guidance.
Okay, all right, Reema, thanks so much for that. Well, we'll be keeping an eye out on Yes Bank as well. If there's any kind of announcement in terms of who's going to be heading the bank from now on. Ritu's with us. She's going to give us some details. Ritu, we're looking at Yes Bank. When is the meeting expected to start?
Well, the meeting is, expected to start in a couple of hours from now. But the important thing to note is that last time during the board meeting, when the bank failed to say that it had actually finalized the shortlist for a successor to Rana Kapoor, the stock took a beating, because of the delay in announcement of a CEO name. Now, do remember, after today, there's only 2 to 3 weeks before Rana Kapoor has to step down as MD and CEO. And typically, we've seen Reserve Bank of India, in the case of Axis Bank and ICICI Bank as well, take some time to approve the names for the CEO. It has to do, all the background references in check. It takes its own sweet time. But of course, we do understand that, the board will today finally send a short list of 3 candidates to the Reserve Bank of India for its approval. The internal favourite is Rajat Monga, who is currently Executive Director. And among external candidates, as we had told you earlier, Rajesh Sood, the former MD of Max Life, is in the running. But CNBC TV18 could not confirm the third name that is likely to be an external candidate, which will also be submitted to RBI. So this will be the most important outcome to watch out for, although I doubt that the bank will disclose the name of these 3 CEO candidates until RBI approves one of them. And the second thing to watch out for would be, it is possible that the board also names one new independent director to take the board strength back to 9 after the spate of resignations we saw last year. One new candidate is required, and perhaps that announcement could also come in today.
Okay, thank you very much for that. Let's move on to the private sector banks. ICICI Bank hit a fresh 52-week high yesterday. Today, Axis Bank has gained close to about 1.8%. Nimish, brokerages are quite bullish on these 2 stocks.
Oh, yes, Rima. In fact, the whole corporate banking story has been the theme for the last couple of quarters. And though it's become a consensus trade now, it's still there are a lot of, brokers who are bullish on both these banks, both ICICI Bank and Axis Bank. I'll start with Axis Bank first. Citibank has written a note today. They maintain a buy, but they've upgraded their target price to 555 from 610 rupees. For FY20 and FY21, they've raised the PAT estimate by 8% and 6%. They feel that there are enough tailwinds for the bank with regards to ROE expansion due to improving operating profits and decline in credit costs. So they are quite bullish on the numbers for FY20 and FY21. In fact, Citibank believes that both ROE and ROA will expand by 80 basis points and 900 basis points between FY19 and FY21. So that's a call coming in from Citibank on Axis Bank. The other stock is ICICI Bank, where Morgan Stanley has been very bullish on that stock for the last 2 quarters. They were the first to upgrade the stock to a buy. They maintain an overweight stance, but now they see while 2018 was a good year, they expect the good year to continue in 2019 as well. The asset quality continues to improve, and there is underlying earnings growth, which is likely to expand the ROE to 15% in FY20. Valuation still attractive, and they have raised the target price to 510 rupees from 460 rupees.
Okay, all right, Nimesh, thanks so much for that. Let's move on then. We learned from banking sources that Jet Airways, Etihad Airways representatives, they met SBI officials late last evening. Ritu is still with us. Ritu, tell us, what are the details? Was there any kind of outcome, and what are the demands?
Well, Jet defaulted on the first repayments on the 1st of January. So as per the RBI FF12 circular, 180-day timeline kicks in from the 1st of January. And therefore, if in that 180-day period, banks are not able to resolve this account, it will head into bankruptcy proceedings. So keeping that in mind, the banks are working on a financial restructuring for the company, where we understand a portion of the debt is possible will be converted into equity. But of course, how much of the debt is really converted will depend on the outcome of a forensic audit report, which is currently underway by Ernst & Young on Jet Airways books. Also, we're given to understand that in yesterday's board meeting, once again, it was made clear in no uncertain terms that no fresh loans will be given to Jet Airways unless, the audit report comes clean. And that is something that, the bankers have stood by. They do not want a repeat of Kingfisher Airlines in the case of Jet Airways as well. Second, they do not want Naresh Goyal to continue in his position. They want him to bring down his stake and possibly even give up his board seat. But we do understand, some sort of a compromise has been reached where banks are agreeable to his son Nivan Goyal perhaps taking over his board seat. But given the restructuring that will be underway, where they've also asked Naresh Goyal and Etihad to bring in money, it is possible, we're given to understand that, after the restructuring, Goyal's stake will come down to below 20%, and that is something that his son could continue with. Also remember, there's almost 1,700 crore rupees of repayment due between now and March, and therefore a moratorium is also something that has been spoken of. But of course, all the lenders have to come on board for this. So far, the meeting has only been held with the lead banker, SBI, and we're expecting more such meetings to finalize this decision very soon.
Okay, thank you very much. Nigel, why are we watching Tata Steel?
Well, Tata Steel, they came out with their provisional numbers and they did look very, very good. So the sales numbers, there was a degrowth in the Indian operations, that's the standalone operations. In the newly acquired Bhushan Steel as well, or there as well, there was a degrowth. And Europe and Southeast Asia, relatively less important, but out there as well, there was a degrowth in terms of their sales volume. So that's clearly disappointing. The management says, particularly with regard to the domestic business, they're saying it's because of seasonal headwinds, lower demand coming in from the auto sector, as well as inventory replenishment. Those are the reasons why, in fact, the domestic numbers haven't looked very, very good. What can support the stock, though, going ahead is that there has been this stock for quite a while now, and reports again indicate that they're looking to sell some part of their Southeast Asia business. So that's one trigger, and the other trigger is basically what's President Trump going to say. Is there going to be a resolution between the United States and China? That's point number one. And the second factor is he's been talking about building a wall. If it's made of steel, then it can spur steel demand as well. But otherwise, the numbers looked clearly disappointing. The street wasn't expecting a big growth, but a degrowth hasn't gone down well at all.
Yes, stock is down 2.5%. A quick recap then of the top buzzing stocks then. We've got Infosys, ICICI Bank, Axis Bank, Yes Bank, Tata Steel, as well as Jet Airways. Get into a break. On the other side, print companies are surging today. So let's pull up something like a DB Corp. That's higher in trade on the back of government hiking the ad rates by 25% for a period of 3 years. DB Corp stock is now at the high point with a gain of 8.5%. Girish Agarwal, the promoter and director of the company, joins in on the other side.